Hello, everyone. Welcome to MSS Mentorship and Online Classes. I am Mohamed Sheikh Sisi, your tutor and your mentor. Today, we are going to look at IFRS 16, leases. We are going to look at how we can account for the lease transaction, how we can, identify a lease transaction. Also, we are going to cover the specific accounting treatment for the lessee as well as the lessor. And finally, we are going to look at how we can account for the sales and the leaseback transaction. Very important concept and very important accounting standard for the financial reporting, audit and assurance, strategic business reporting, and advanced audit and assurance examinations. So it is important you pay attention to the concept. So basically, we are going to look at the definition of leases, and also we are going to look at how we can identify a lease transaction, which is very much important for the examination. To be specific for strategic business reporting students and advanced audit and assurance students, because when question will be tested on strategic business reporting for IFRS 16, you will be asked to explain a specific accounting treatment, which will cover the concept of whether there is a lease or there is not. So basically, we are going to look at the definition of lease. A lease is a contract or part of a contract. First important point that you need to know. First point, a lease is a contract or part of a contract. First point you need to take into consideration. That gives the right to use an asset for a specific period of time in exchange for consideration. So this within the definition of leases, you need to know the various components. Firstly, it should be a contract. Second, it should give the right to use the asset. Third condition, the asset should be unique and should be specific. Then also, the period of time should be clearly stated. Stated the period of time. Then finally, there should be a consideration in which will be subjected to the lease agreement. So basically, if you want to identify a lease transaction, a lease contract, you need to know the elements of the definition. There should be a contract or it should be a part of a contract that gives the right to use a specific type of asset for a specific period in exchange for a given consideration. We are going to look at it detailed in the later section. Let's understand the relationship between the lessor and that of the lessee, for example. Now, for instance, I own a three-story building, right? I am the owner of the building. I have all the legal title, all the legal documents for that particular building as well as the land. Now, I want to lease this property to someone else. So if I am the owner, then automatically I am the lessor. Then the person I'm going to lease this particular building to will be the lessee. I am going to transfer the right to use that particular building to the lessee. So the individual that will receive the right to use this specific type of asset, we refer to that particular person or entity as the lessee. So very important concept and very important distinction that you need to know for the examination. A right of use asset represents the lease right to use underlining specific type of asset for a given period of time. Very clear. So now we are going to look at the definition of leases in extension because it's very much important you understand. And these 4 points I'm going to mention, I'm going to elaborate on. It is very important for the ACCA examinations. So now, if we are talking about the identifiability of the assets, according to the lease definition, the asset should be identified. we need to identify the asset. Now, what is the meaning of identification of the asset? We need to clearly state the assets that we are going to lease to the lessee. The lessor within the lease agreement should clearly state the specific type of assets that will be leased to the lessee. For example, we are talking about a vehicle with a registration number of ABC123, for example. Let's say a Toyota Hilux. Now, within the lease agreement, the lease item should be Toyota Hilux with a registration number of ABC123. So now, if the item that is given to the lessee is not Toyota Hilux, or let's assume it is Toyota Hilux, but the registration number is not, ABC123, then automatically that asset is not qualified to be classified as a lease because it is against the lease agreement. The lease agreement clearly stated that the asset is Toyota Hilux, for example, with a registration number of ABC123. So now, if the car is Toyota Hilux, but with a registration number of ABC 124 or 122, then that asset is not a specific asset. It is not an identifiable asset. So we can't include it as a lease agreement. So it is very much important that the assets, we can clearly identify the asset. Also, the asset that we are going to give out to the lessee should not provide any substitute right. Now, what I mean is that during the process, let's assume the car is for 3 years with the correct registration number at the start of the lease period, right? At year two, we decided to replace, to substitute the vehicle number ABC 123 with a vehicle of ABC 124. Automatically, this should not be part of the lease agreement. When the item, when the asset is clearly stated, then it should remain that particular asset for the specific period of time according to the lease agreement. So this is the first point you need to know as a student. Second point, concerning the definition of lease, the right to obtain economic benefits. Now, what I'm saying is that for the motor vehicle, for example, the lessee should be able to use that particular motor vehicle for the specific purpose under the lease agreement. In other words, the utilization of the motor vehicle should not be attached with any condition. Now, for example, the lessor made it clear that within the lease period, you are going to use the motor vehicle for let's say for 5 hours on a daily basis. Then I am the lessee. I'm the lessor. I'm going to use the car for 3 hours. So in total, the car will be running for 8 hours a day, but you are going to use the lessee will use 4 hours, whilst I am the lessor will going to use let's say 2 or 3 hours. Automatically, since there's a condition attached to the utilization of the lease item, then that should not be classified, should not be categorized as a lease transaction. Why? Because the lessee will not receive the full economic benefit from the lease agreement. And if you are looking at the definition of an asset, it is very much important that the present, the economic benefit should be generated from the utilization of the asset. And this is an asset according to the lessee. Because when we are going to look at the lessee accounting, the lessee will recognize the rights to use assets and the statement of financial position. So for the lessee to recognize the rights to use assets in the financial statement, it means the lessee should have absolute control, absolute condition in the utilization of the lease asset. Second very important point we need to know, the asset should not be on condition. The third point, the right to direct the use. As I mentioned earlier, the lessor should not continuously direct the utilization of the asset. Once the lease agreement has been finalized, then automatically the lessee should have the right to, use the asset, should have the right to direct how the asset should run. Although you should not utilize the asset at the expense of the legal ownership. For example, if we are talking about machinery, it's a useful life for 5 years to produce 10,000 units of pure water, for example. Then, if this machine is leased to the lessee, then the lessee decided to increase the production capacity from 10,000 to 15,000 pure water, which in the real sense, the capacity of the machine cannot produce 15 or 20,000 bottles of pure water. So in that situation, the lease agreement should clearly state all of these various conditions. But the key point is that the lessor should not direct the utilization, the use of the lease item. Very important period. Very important point that you need to know. Then the final point within the definition of the lease, there should be a specific fixed period of time. Now, for example, the motor vehicle is for 3 years. The period of time should be clearly stated. If the machine is for 10 years, it should be clearly stated within the lease agreement. We should not go into lease agreement for a lease item that the period of time is not clearly stated. Very important concept. Then also, the lease agreement should contain a consideration. There should be an exchange of something. If I'm going to lease my three-story building to you or my motor vehicle, you need to give me back. You need to give the lessor some consideration in exchange for the lease item. So basically, for you to identify a lease transaction as a lease according to IFRS 16, these four conditions, as per the definition of leases, should be present. Very important concept you need to know, especially for strategic business reporting and advanced audit and assurance students. So now, very important concepts for us to understand as well. As an accountant, you need to know the background of your accounting standard. So now, we are going to basically compare and contrast the previous accounting standard, which is IAS 17, and the current accounting standard, which is IFRS 16. IAS 17 was the old standard for leases, and IFRS 16 is the current standard for leases. So basically, IAS 17, classified lease transaction as a finance lease or as an operating lease, period. Now we are going to understand the distinction between a finance lease and an operating lease. But according to AES 17, the lease transaction will be classified as a finance lease or as an operating lease. Now, in later session, we are going to look at the problem of classifying all lease transactions into finance lease or operating lease. So now, according to IFRS 16, the current leasing standard requiring most leases to be recognized on the balance sheet. Now we are going to understand that statement as well. But what we need to know for IFRS 16, all leases with except to low value or short life assets, we are going to look at it separately. All leases in exception to these two criteria, to these two, low value and short life assets should be recognized on the statement of financial position with no exception. So now we are going to look at what is the actual meaning of a finance lease, and we are going to look at the meaning of the operating lease. Now, when we are talking about a finance lease, it is a lease that transfers substantially all the risks and reward of ownership of an asset to the lessee, even if legal ownership does not transfer. Now, for example, I am the owner of this three-story building. I am the lessor. I decided to lease the three-story building to the lessee. Now, automatically, for me to recognize this transaction as a finance lease, it means I need to transfer a substantial risks and reward of ownership to the lessee. In the real sense, in legal documents, I am the owner of the three-story building. But in substance, in the utilization of the three-story building within the lease period, the lessee should have that risk and reward. Within the lease period, if anything goes wrong, then it will be a risk to the lessee. And if any benefits obtained from the building will be a reward for the lessee. Now, another example. For example, we are talking about machinery, right? If I am the owner of the machine, then I am the lessor. Then if I decided to lease the machine to the lessee, for a specific period of time, let's assume 3 years. Now, it means I am transferring a substantial risk and reward to the lessee. In other words, I am the actual owner of the machine, whilst the lessee will have the risk and reward. If during the lease period of 3 years, if there is any major default on the machine, then it will be a risk on the lessee, not the lessor. Then if there is a benefit obtained from the utilization of the machine, for example, increase the production capacity for the company, for example, then it will be a benefit for the lessee. So this is what we refer to as a finance lease. So any of this category of lease should be account for according to IAS 17 as a finance lease, according to IAS 17 as a finance lease. So this is the definition of finance lease. So we are going to look at the key characteristics, the key indicators for us to classify a lease transaction as a finance lease. Firstly, we are talking about the ownership should be transferred to the lessee. I'm not talking about legal ownership. I'm talking about the ownership of controllability, looking at the concept of substance over form. Also, the lessee has the bargain purchase option, for example. Now, another point we need to know, if let's assume for the machine at the end of the 3 years, for example, the machine, within the lease agreement, there's an option to purchase the machine. If the machine period is the lease period is 3 years, then within the lease agreement, if there's an option to purchase the machine after the lease period, then this is a clear indicator that there is a significant transfer of risk and reward of ownership to the lessee. Second point, the lease term covers a major part of the asset's economic benefit. It's very clear. If the useful life of the machine is 5 years, then the lease period is 5 years. It means the whole, let's assume if you are going to calculate depreciation, the whole machine will be depreciated during the lease period. So it means major part of the economic benefit has already been covered within the lease period. So automatically, these categories of lease should be accounted for as a finance lease. The present value of the lease payment equals to substantially all of the asset fair value. Now, when we are going to calculate um, for the lessee accounting, we are going to look at the amount that we are going to debit as the right of its asset and what we are going to credit as the lease liability. Asset is specialized and only usable by the lessee. Very simple. If the asset is a unique asset, then automatically, we can classify that particular lease as a finance lease. Now let's look at example. A company leases machinery for 5 years, which is almost the entire useful life, with an option to buy at a low price. Fine. Automatically, there's a two indicators. One is that the the machine, the lease period is the same as the useful life of the machine because it is almost. Then also, secondly, there's an option to buy the machine at the end of the life. So automatically, this particular lease transaction, we are going to classify it as a finance lease. Now, what is an operating lease? Very important. When we are talking about operating lease, it's a lease other than a finance lease, where the lessor retains significant risks and reward. Now, as I mentioned about the building, it's a three-story building. I decided to lease it for a period of 3 years. In no situation that I'm going to transfer a significant risk and reward to the lessee, because by default, the building, can't able, the lessor can't able to transfer a significant risk and reward to the lessee. Now, for the machine, for example, mhm, if within the lease agreement there is a clause that clearly stated that you don't have the option to purchase the machine at the end of the lease period. Then also, let's assume the machine has a period, a useful life of 10 years, for example, but the lessee decided to lease it for 3 years. Automatically, the risks and reward will still be with the lessor. So in a situation where the lease transaction contains the lessor with a significant risk and reward, then this particular transaction should be classified as an operating lease. It is very important you identify, you annotate the difference between the finance lease and the operating lease. Now let's look at the key characteristics. The lease term is shorter than the asset useful life, as I mentioned earlier. If the asset useful life is 10 years, the lease term is 2 years, then it's obviously that, even if you decided to calculate a proportion, then it means the risks and rewards still remains with the lessor. Asset is returned to the lessor at the end of the lease period. No bargain purchase option. Lease payments are usually straight line basis. We're going to look at it, don't worry. Now, let's look at an example. A company rents office space for 3 years with no option to purchase. So, as a student, you need to know the distinction between finance lease and operating lease. Before IFRS 16, this is how all lease transactions are recognized in the statement, in the financial statement. Very clear. So now we are going to look at key differences between IAS 17 and IFRS 16. One key difference, we are going to look at the lease type. For IAS 17, this is for the lessee. For IAS 17, finance lease and operating lease is what we are going to use to account for the lease type. Now, for IFRS 16, there is a single lease model, which is mostly used. Single lease model, we are going to look at it. For example, for the lessee, when there's a lease transaction, you will debit the right to use assets and you're going to credit the lease liability. Although there is subsequent treatment, we are going to it. So for now, the lease type for IAS 17 is finance and operating lease, while for IFRS 16 is a single lease and single lease model, unified, harmonized model that is being used currently. Now we are going to look at the operating leases. For IAS 17, it's off balance sheet. This is the major reason why the adoption of IFRS 16. Now, when you're talking about off balance sheet, it means a legal transaction of a company, a day-to-day operational activities of a company that is not recognized in the statement of financial position. For instance, the the lessee has the right to use the asset, but under IAS 17, if it is an operating lease, then it means they are not going to recognize it as an asset in the lessee statement of financial position. Now, let me make it clear. For example, the machine has a useful life of 10 years. The lease period, the lessor decided to lease the machine to the lessee for 3 years. Automatically, we are not going to account for this as a finance lease because there is no option to purchase the asset, and also the risks and rewards still remains with the lessor. So in this situation, when the lessee is going to account for the lease transaction, it will not include it in its own financial statement, in the statement of financial position as an asset. So this is the major reason why the adoption of IFRS 16. For the finance lease, also the finance lease is on balance sheet, which will be recognized as an asset in the financial statement under IAS 17. Same goes to IFRS 16. It will be accounted for on the statement of financial position as the right to use assets. Another distinction, assets recognize only finance lease that we are going to recognize for IAS 17. Whilst for IFRS 16, we are going to recognize the right of use assets. The liability recognized for IAS 17, only the finance leases we are going to recognize liability for. While for IFRS 16, all leases other than the short term or the low value leases will be recognized the lease liability. Now, key change. Under IFRS 16, leases recognize almost all leases on the statement of financial position. Key change. Under IFRS 16, the lessee recognize all the almost all leases on the statement of financial position. We are going to look at the exception to this statement. So now also we are going to look at the distinction between IAS 17 and IFRS 16, looking at how we can recognize, how we can account for the expenses. If we are talking about the operating lease expense, for IAS 17, we are going to use a straight line. Wise, for IFRS 16, we are going to use the depreciation plus the interest expense. We are going to look at it separately. Don't worry. Just try to figure out the difference. Then when we are going to, to dive deep into the calculation, then I'm going to reference this point so that you can able to understand the concept in detail. The profit impact for IAS 17, even expense pattern. For IFRS 16, a front-loaded expense pattern. Don't worry about it. Now, also, we are going to look at the cash flow, the impact of the cash flow, the distinction between IAS 17 and IFRS 16 relating to cash flow. For operating lease payments, IAS 17 it classify as operating activity. Whilst for IFRS 16, there is a split between operating activity and financing activity. It can either be operating or it can be a financing activities, depending to the situation. For financing cash flow, IAS 17 is low and IFRS 16 is high. Don't worry, we are going to look at it. Now, we are going to look at the difference between IAS 17 and IFRS 16 under the lessor accounting. Though it's minimal difference, nothing much to worry about. For this level, you don't need to worry about the lessor accounting for financial reporting student, but for SBR, strategic business reporting, you need to know the accounting statement for the lessor. Now, let's look at the difference. The area classification, operating and financing this. Recognition, lessor accounting unchanged. Now, for the classification, IAS 17 classify all these transactions, either operating or financing. But IFRS 16 also classify all these transactions for lessor. I'm not talking about lessee, for lessor. If the lessor is going to account for a lease transaction, then automatically, you know, the lessor should ensure that it recognizes the operating lease and or a finance lease. The recognition for the IAS 17, the lessor accounting is unchanged, is the same, nothing to worry about. Then, with regards to IFRS 16, there is a great change. We are going to look at it for the strategic business reporting students. So now, let's understand the objective of IFRS 16. The objective of IFRS 16 is to ensure that leases or lessee, provide transparent and faithful representation of leasing activities by recognizing asset and liability arising from the leases. So this is the objective. This is the fundamental reason why the International Accounting Standard Board, decided to move from IAS 17 to IFRS 16. Very important concept. Looking at IFRS and looking at IAS 17, there is less transparency and there is an off balance sheet item, and this is totally not acceptable by any accounting practice to have a business transaction that is not go into the that is not included into the financial the the financial statement. It is unacceptable in all practice. This is why we have the conceptual framework. The financial information should faithfully representation. It should include all information, whether it's relevant or not, it should include. So basically, this is the key concept about IFRS 16. Now we are going to look at why IFRS 16 was introduced. Under IAS 17, operating lease were off balance sheet, leading to understatement of assets and liability, which is clear. Lack of comparability between entities that lease versus buy assets. Still very clear. There is less, we can't able to compare between the entity that lease or the one that buy the assets when we are using IAS 17. IFRS 16 eliminate this issue by requiring on-balance sheet recognition for most leases. So the solution to this problem is that IFRS 16 clearly stated that most leases, with except to short life lease or low value lease, should be recognized on the statement of financial position, debit the right to use asset, and credit the lease liability. So basically, we are going to look at the scope. This is where we are going to stop for this lecture. We are going to look at the scope of IFRS 16. IFRS 16 applies to all leases except leases to explore for minerals, oil, or gas. IFRS 6, we can't use, IFRS 16 on this particular situation. Biological assets, IAS 41, no IFRS 16. Certain license of intellectual property, no IFRS 16. So basically, um, I'm going to stop here for now. We are going to continue in our next session for the lessee accounting. So what you need to understand for this particular session, you need to know the definition, and you need to know the elements of the definition and how you can apply it in a real life. So thank you very much for your time.